now that we've explained why a decrease in current assets causes an increase in cash flow, we're now going to explain why an increase in current assets causes a decrease in cash flows. So the rule is, if a current asset increases, then subtract the difference from the operating activity section of the statement of cash flows. And we'll explain why. So now we have a partial balance sheet, Mary's mowing service, and we're going to analyze inventory. So the first question is, did inventory increase or decrease from March to April? It looks like inventory increased by $200. So what would cause Mary's inventory to increase? Well, she must have purchased inventory. So if she purchased inventory, what effect does that have on Mary's cash? $200 increase in inventory would cause a $200 decrease in Mary's cash. So you now may be saying, well, what if Mary bought it on account? Well, if Mary purchased inventory on account, that would show up as a change to accounts payable, which will be discussed later. So we must subtract the difference from the operating section of the statement of cash flows if inventory increases or any other current asset. So we're going to use that partial balance sheet, and we're going to assume there's a net income of $380 and do another statement of cash flows for Mary's mowing service. So net income is always at the beginning because it approximates operating cash flows. And now, remember, her inventory went up by $200. So if inventory goes up, do we add that or subtract that? Well, if inventory went up, then cash must have gone down. So we subtract it. So net cash provided by operating activities was a positive $180. So when analyzing these rules or trying to figure out these rules for current assets, the easiest one to analyze is inventory. If inventory went up, then we must have bought inventory, therefore cash went down. And if inventory went down, therefore we must have sold inventory, so cash must have gone up. So these rules for current assets applies to all current assets. But there is one that's a little bit tougher to figure out, and it's not intuitive, so we'll discuss that separately. It's when AR increases. So when inventory increased, we subtracted the change from the operating section because the company was buying inventory, therefore was spending cash. And as I said earlier, the same is true for all current assets, including AR. When the current asset increases, subtract the difference from the operating section. But why do this for AR? Does that make intuitive sense? If AR increases, we should subtract. For most students, this is not intuitive, so we're going to show this step by step on the next slide. So we're going to do the world's easiest statement of cash flows. The company is going to have only one transaction for the month. So imagine a company had a transaction that was performing a service on account for $1,000. So if we performed a service on account, AR is going to increase. That's our debit account. And service revenue is going to increase. Now remember, this is the only transaction for the month. So how much cash flow did this company have? Well, cash isn't affected at all, so cash flow was zero. But remember, the statement of cash flows begins with net income, an accrual-based number. So how much income did they have if this was their only transaction for the month? Well, net income is revenue minus expense. There is a revenue, 1,000, and there's no expense. So their net income was 1,000. And as I said, the $1,000 is at the top of the statement of cash flows because it's net income. So how do we go from $1,000 net income down to zero cash flow? Well, you have to back out or undo or remove the increase in AR. Why? Because the AR increase is included in net income because there's revenue associated with it, but it does not count as cash flow. So since it added to net income but did not involve cash flow, you have to undo it or remove it. So you have to subtract the increase. So what most students do when they are trying to analyze changes to current assets, they just use inventory as the example because that one is the most easy to analyze.